Here are more important FAQs on the stock market. 41. What is the difference between a primary and secondary market? The primary market is where securities are created and sold to the public for the first time, typically through an IPO. The secondary market is where previously issued securities are bought and sold among investors, e.g., the NYSE, Nasdaq. 42. What is a stop-loss order? A stop-loss order is an order placed with a broker to buy or sell a stock when it reaches a certain price, used to limit an investor's loss on a position. 43. What is a take-profit order? A take-profit order is an order placed with a broker to buy or sell a stock once it reaches a certain price, used to lock in profits when a stock reaches a predetermined price target. 44. What is the difference between growth and value stocks? Growth stocks are companies expected to grow at an above-average rate compared to other companies, while value stocks are shares of companies considered undervalued relative to their fundamentals. 45. What is an annual report? An annual report is a comprehensive report detailing a company's performance over the past year, including financial statements, management analysis, and business strategy. 46. What are cyclical stocks? Cyclical stocks are shares of companies whose performance is closely tied to the economic cycle. These stocks tend to do well in periods of economic expansion and underperform during recessions. 47. What are defensive stocks? Defensive stocks are shares of companies that provide essential goods and services, like utilities or healthcare, which tend to perform relatively well even during economic downturns. 48. What is the difference between a stockbroker and an investment advisor? A stockbroker executes buy and sell orders for clients, while an investment advisor provides personalized financial advice and investment strategies to help clients manage their portfolios. 49. What is a proxy vote in a shareholder meeting? A proxy vote allows a shareholder to delegate their voting rights to someone else, usually the management or a third party, if they are unable to attend a company's annual meeting. 50. What is a margin account? A margin account is a type of brokerage account where investors borrow funds from the broker to purchase securities, allowing them to buy more than they could with their own capital. 51. What is a penny stock? Penny stocks are low-priced, speculative stocks typically traded outside of the major exchanges, often with high risk and low liquidity. 52. What is the Dow Jones Industrial Average, DJIA? The Dow Jones Industrial Average is one of the oldest and most well-known stock indices, consisting of 30 large, publicly traded companies in the US, used to gauge the overall health of the stock market. 53. What is the Nasdaq Composite? The Nasdaq Composite is a stock market index that includes over 3,000 companies listed on the Nasdaq Stock Exchange, with a strong focus on technology and growth stocks. 54. What are defensive sectors? Defensive sectors include industries that are less sensitive to economic cycles, such as utilities, healthcare, consumer staples, and telecommunications. 55. What are growth stocks? Growth stocks are shares of companies that are expected to grow at an above-average rate compared to other companies, often reinvesting their earnings back into the business for expansion. 56. What is the efficient market hypothesis, EMH? The efficient market hypothesis suggests that stock prices reflect all available information, making it impossible to consistently outperform the market by using any kind of investment strategy. 57. What are the benefits of investing in stocks? Investing in stocks offers the potential for high returns, dividends, and capital gains. Stocks also provide ownership in companies, with the opportunity to benefit from their success and growth. 58. What is the risk of investing in the stock market? The risk includes market volatility, the potential for loss of principal, company-specific risks, and economic risks that may affect the overall stock market. 59. What is the role of the Securities and Exchange Commission, SEC? The SEC is a U.S. government agency that regulates the securities industry, ensuring fair and efficient markets, protecting investors, and enforcing securities laws. 60. What is a limit down? A limit down is a situation in which a stock or index falls to a set limit during the trading day, preventing further declines. It is often a safeguard against extreme market volatility. 61. What is a limit up? A limit up is when a stock or index rises to a predetermined price limit during the trading day, preventing further increases. This is used to curb excessive volatility in the market. 62. What is an exchange-traded note, ETN? An ETN is a debt instrument that is traded on an exchange and typically linked to a market index or other assets. ETNs are similar to ETFs, but are unsecured debt obligations of the issuer. 63. What is a capital gain? A capital gain is the profit made from the sale of an asset, such as stocks, that has appreciated in value since it was purchased. 64. What is a capital loss? A capital loss occurs when the value of an asset, such as stocks, declines after it has been purchased, resulting in a loss when it is sold. 65. What are stock options? Stock options give the holder the right, but not the obligation, to buy or sell a stock at a specific price within a certain period. 66. What is the bid-ask spread? The bid-ask spread is the difference between the highest price a buyer is willing to pay, bid, and the lowest price a seller is willing to accept, ask, for a stock. 67. What is a primary offering? A primary offering refers to the sale of new shares directly from a company to raise capital, typically during an IPO or secondary offering. 68. What is an earnings report? An earnings report is a financial statement released by a company, detailing its revenue, expenses, profits, and other important financial metrics over a specific period. 69. What is a bull trap? A bull trap occurs when a stock or market appears to be in a rising trend, bull market, but quickly reverses direction, trapping investors who have bought in at higher prices. 70. What is a bear trap? A bear trap happens when a stock or market shows signs of a downward trend, bear market, but reverses direction, trapping investors who have sold short. 71. What is a stock warrant? A stock warrant is a financial instrument that gives the holder the right to buy a company's stock at a predetermined price before a specific expiration date. 72. What is an earnings per share, EPS? EPS is a financial metric that shows a company's profitability, calculated by dividing net income by the number of outstanding shares. 73. What is a credit rating in the stock market? A credit rating assesses the creditworthiness of a corporation or government entity, influencing investor decisions and interest rates on bonds issued by these entities. 74. What is a sector rotation? Sector rotation is an investment strategy where investors move capital from one sector of the economy to another, based on the current economic cycle or anticipated